All right, welcome back to Orlando Matters. I'm Keith Landry. We're helping you make sense of all the goings on in Washington, D.C. The partial government shutdown ends. The federal government's open for business again. But maybe the bigger issue, I believe, is this extension of the debt ceiling into February. Essentially, Jason Edwards, what we're talking about is I've got a family budget. I've got 4 credit cards that are completely maxed out. And I say, sweetie, let's go get another credit card for 10G, and that'll carry us through February.
That's exactly right. So, I mean,
it's ridiculous.
It's funny we laugh about it,
right.
But that is really, if you put it in your viewer's perspective, that's it.
Yep.
You and the wife had a meeting and said, honey, we're overextended. We have way too much on debt.
Yep.
You know what we'll do? Let's get another credit card, and that'll last us a month and a half.
Yep, that's what's going on in Washington.
And that is a ridiculous fiscal policy.
Why is this so dangerous for the long-term stability of our economy, of our children's future, of our investments?
Yeah, a great question, Gil. So with our clients, you know, that's the billion-dollar question. I've got a 401k, I've got an IRA. Where do I invest? When do I pull the trigger?
Sure.
You have a lot of people that get out of equities and get into cash, then try to get back in. So it's what we call market timing. Mm-hmm. So if you take all those variables, the bigger issue is this. Right now, the economy is driven by corporate America. Yeah. It's not driven by the U.S. policy. It's driven by corporate America. Sure. So you've got companies that have very strong balance sheets. They're doing very well. They've adjusted with less employees, so they're spending less money.
They're lean and mean.
They're lean and mean because of what happened since the last correction. So they're reporting very strong earning reports. They have a very good model. So it's nice economic sustainability. Mm-hmm. But if you factor in the reality of the possibility of certain government programs being cut or certain aspects of the U.S. economy being contracted so that things like the U.S. Treasury become less attractive, the hangover really will impact us at the end of 2014. So now you've got companies that are even more leaner, and now they're even more concerned about capital. So what do they start doing? They start cutting benefits, they start cutting employees, they start cutting hiring, they stop spending, so their vendors impact. So there's a ripple effect that I think everyone will feel with their 401k and their IRAs. So we're telling our clients now is the time to sit down with whoever you consider a professional team and really look at your portfolio, because after the horse has left the barn, it's a little too late.
Sure.
Yeah.
So what happened in Washington this week was like a college student calling the professor and said, look, I'm not ready for the test yet, but if you can give me maybe 10 more days to study, I promise you I'll get a B+.
Right.
And that's what they did. They bought some more time to go have the tough negotiations that they couldn't get done. Yeah. What's going to happen in the next 6 weeks or so?
I think if you look at a pattern, and again, let's just look at a pattern of anyone. If somebody does what you just described, you had a student that continually called the professor and got those exceptions, what would you do next time? He'd call again for the same exception, right?
Yeah.
So let's look at the government. It is never really, both sides have never sat down and said, let's look at cutting spending. Let's look at being fiscally responsible. Let's balance our checkbook. That's never been a policy. They say it has, but we know it never has. So I think what will happen is there will be another Band-Aid, another extension, another kicking the can down the road. Unfortunately, what comes with that is there's never a resolution. And as everyone knows, the stock market particularly hates any kind of nervous energy. It hates any kind of insecurity. So without any secure future, there's always going to be these conversations.
From your position as an economist rather than as a political player, why is it so important that we finally bite the bullet and make some kind of cuts? And then explain to us how small this sequestration really was. This big debate the last couple of years about sequestration cuts, it's a tiny piece of our debt.
Yes. Well, it's a great question. Again, sometimes politicians like to use information maybe inaccurately to get it their way or to position themselves. But from an economics perspective, think about it. Would you rather be in a household where you had surplus income, the ability to pay unexpected bills, the ability to deal with, oh my goodness, this just happened? Or would you like to be in a household where you're overextended and you have tons of credit cards maxed out and no cash or no liquidity?
Right.
I mean, it's a logical choice. Which would you rather? So from an economics perspective, it would make sense for a country or a government, which is no more than a big company, to have enough reserve capital to deal with what ifs. What if there's a Katrina? What if there's a 9/11? I mean, the fiscal issues go on and on.
Right.
And the other issue is you talked about the sequestration. We're talking about less than 1% of the fiscal debt.
Right.
So we're not even cutting close to what we should be cutting. And if you sat down again with the analogy of your wife and said, honey, we're overextended. We're going to get this credit card that's going to push us for 2 months out. But I tell you what we'll do. We'll cut $5 a month out of our budget spending. What do you think?
It's a joke, right?
It's a joke. Yeah. So, I mean, the reality of it is the economic reality has to be such that the cuts are substantial. They have to be realistic. They have to be situations where how much revenue comes in, and simply creating more taxes and simply asking you or I to give more money to a bank account that's already overdrawn is just unrealistic.
Let me ask you, do you believe that we're in a position in this country where we can come back still and reduce that debt in a way that our economy is doing pretty well right now, but long term, can we bite the bullet and get that debt paid down?
Well, there's two things that work in our favor. One, the U.S. economy is still the largest economy in the world. Everyone's still following us, including China. Two, there is still a tremendous amount of revenue that comes into this country from taxes and from other resources. So we know that within a stroke of a pen, cutting certain programs, we could actually be in a surplus within a month. So I think the opportunity's there. I think the reality of it is the picture very clear, and are individuals going to look at the economic and business and fiscal benefits of that, or is it still going to be the pulling on the heartstrings and trying to make people feel about things that maybe aren't realistic?
So last question, where do we go from here? Where do you think the stock market goes for the rest of the year in light of possibly some more uncertainty 6 weeks from now?
Great.
What are you looking at? How fundamental are people's investments for the rest of the year?
Well, there's two parts to that. I think if the government stays status quo, which means there may be another kick the can, but at least you know the playing field, the indicators that we're watching, there are some incredible sectors that have done phenomenal. So we think from an equities perspective, again, very precise sectors, we're not saying the whole equities market, not the Dow, the S&P, you've got opportunities of 400 to 300% growth. There were some areas last year that did tremendous amount of growth. So I think there are incredible opportunities. But again, it's talking about being selective, being very, very tactical in what you're looking at. And I think economically, 2014 is starting to look a little bit better because some of the headwinds that we saw, for example, the Affordable Care Act, some of the debt consolidation, have sort of been minimized with government exceptions for big corporations and things like that.
Interesting. All right, Jason Edwards with Edwards Financial Services in Winter Park. Thanks for being here today.
My pleasure. Thank you.
We'll be right back, and we'll have more Orlando Matters after a quick break.